What's up, YouTube? Hope everybody's enjoying the beginning of the earnings season. Recently had some big dogs report earnings. When I say big dogs, what I mean by that is your Teslas, your Googles, your Metas. So I'm going to talk about. I'm gonna summarize those earnings and pretty much go into how does that affect one of my companies and what I'm expecting and so forth for one of my company's upcoming earnings. All right. So in the prior video that I posted prior to those earnings, I pretty much guided, or I'm thinking that I pretty much thought my thought process was, there will be some macro turbulence in the microchip sector. All right. And if you've been following along, SMCI, they dropped. Their stock took a big drop because they did not put out preliminaries. And SMCI is kind of an indirect play with NVIDIA because their business models align. SMCI does some manufacturing material stuff, and NVIDIA is one of their customers. So pretty much in that video, I pretty much said that I was expecting SMCI and NVIDIA to probably cut or slash revenue guidance. Based on the earnings from Meta, Google, and so forth, and Tesla, I'm gonna just say that's probably not gonna happen. I think that the sector is pretty much good to go as far as demand. I pretty much put some comments down here. Channel of transparency. I'm gonna have to go back on that based on the guidance that was put out from the big dog players. All right, that AI capital expenditures for these actual GPU microchips is still ongoing. All right, the arms race still continues. So and I was pretty much and based on that, I was even positioning in one of these companies, Navitas, and there was a dip on Navitas, and I bought that dip. And then based on the earnings from those big dogs, the market started to reciprocate. All right, like as you can see, like SMCI, they took that dip that we talked about, and while the earnings were happening, they're pretty much starting a V-shaped recovery. Same idea with NVIDIA, not so much, or more so a V-shape, but NVIDIA didn't take that much of a downfall as compared to SMCI, if you will. So, excuse me. How does this affect one of my companies going into earnings? And what am I doing? What's my projection? How am I feeling as an investor, and so forth? All right. Palantir. All right. Palantir is the one that I'm starting to change as far as outlook, economic macro outlook, all etc. All right, based on the big dog earnings. So if GPU and microchip demand for capital expenditures from these big dogs is high, if there's high demand and their capital expenditures for R&D going into AI continues to be strong, I think the software side of the house is going to end up being strong. And that's where Palantir comes into play. All right, so you can think about buying an expensive top-of-the-line fighter jet, which is better than all the other fighter jets in the world, and not having the best software to fuel it, or the best pilot to fly it. All right, you're going to need the software to back up that hardware, or to keep up with the hardware, and vice versa. It's the same idea, seesaw. They both need each other. Okay, so Palantir, with the geopolitical instability, I'm getting more bullish because there's more war stuff happening in the world. With the AI demand, that's another contributing factor. I'm getting more bullish. Commercial customer growth with the actual boot camps happening, I'm getting more bullish. And if you've been following along my latest or my past few videos of Palantir, I don't really put much videos out there, but pretty much I've been pretty bearish on the price action. All right, I even sold some covered calls. Let me pull those up. Pull these up real quick. So I even have covered calls running on Palantir. All right, and I bought them in March when the stock price was a little bit up there, and valuation is a little bit up there, and I told myself, you know what, the market is not gonna, I think the market is pretty much going to take a dump on Palantir, pretty much a little bit. So I sold those covered calls, and for various other reasons too. All right, I owed Uncle Sam some money via the IRS. All right, so I had to raise some capital, get Uncle Sam paid, which I did, and this is one of the ways that I did the capital raise as well. All right, let me pull up my Palantir position real quick. Let me see here. Drag this over here. Bear with me. So as you can see, and I'll maximize better. This is my Palantir position. All right. Well, most of it anyway. I mean, there's some buy lots that are not from the bottom that are not there, but anyway, this is the whole position for generally the whole position. And as you can see, these shares are all long now. So, hey, cheers. I have long shares now. And pretty much what that means is I've held the shares over a year. So if they're sold from a capital gains perspective, I'm not paying the higher short-term capital gains rate. I'm paying the lower long-term capital gains tax rate, which is dramatically lower. And that's advantageous to me, especially if I'm having to pay taxes like quarterly ahead of time for the next year or whatever. All right, so I'm feeling comfortable with the shares being long, but what I'm not comfortable with now is the covered call position and the risk of losing the shares. All right, I don't think that the stock goes over 30 a little after earnings, even during earnings or whatever. But there's a chance that it could go over 30 and my shares can get called away. I think the odds of the covered call, are not as favorable as they're priced in to be right now. So what I mean by that is I think if someone's buying covered calls at, or when they were buying covered calls, even now at these levels on the covered call premiums, I think if people are starting to buy covered calls right now or a little before I posted this video, they're probably getting good value, even though it's still a form of gambling kind of, so I think stock's going to go up on earnings. All right. And I want to talk about more of the long-term mentality thesis of the revenue, the revenue growth, if you will. You see, let's go to Palantir on Seeking Alpha. We'll go to earnings and earnings estimates. All right, they're projected for their revenues. They are projecting 20%. All right, for these next few years. All right, I'll let you in on a little secret. And if you're a Palantir bull, which I am, if you haven't noticed already, I believe in the heart of every Palantir bull that they want to see 25% revenue growth for December 2025 and going forward, at least 25%. 25% is the magical number. All right. And I mean, it's going to justify the multiples way better. The growth is going to compound much better at 25%. There's something psychological about 25%, which is the standard in SaaS tech companies with the SaaS business model, with the margin expansion, 25%. Hey, that's it. If we can get 25%, I mean, we're looking real good from a growth perspective. If on the earnings, commercial customer growth increases above that 70% or whatever that was pretty much posted last earnings, and they beat revenue growth expectations, and they guide that 25% is going to be the new norm long term. Stock's going over 30. My shares are getting called away, you know, and I don't really feel too good about it. All right. Um, and the way that the boot camps are running, and the actual payment schedules, translations from those boot camps, and customer counts, and so forth, and how the contracts are going to be running, there is a delayed reaction from when a customer comes on board, from when they start actually signing contracts and so forth. I believe there's a delayed reaction from the start of the boot camps to now, to where maybe not this quarter, but maybe next quarter, we're getting close to where we might see a big lump of revenue growth just happen in one of these earnings that could propel the stock. Now, I mean, from a technical perspective, I've talked about this before, and there's another reason why I sold the covered calls, is there's a lot of resistance that was built up years ago. It's like a year's worth of resistance right here in the 2020 to 2021. All right, so we need the fundamentals to break out of that resistance that's been built up, and so forth. All right, so my plan. All right, what is my plan? Okay. These covered calls, if we see a dip and the premium goes below $200 on the value, maybe next week we say a little dip. I don't know, because I think Palantir is starting to run already into earnings. But if there's a little tiny bit of turbulence and stock goes down a little bit and a premium goes under 200 a share, I'm probably just going to buy to close it out and not risk my shares. I mean, I'd probably gain, 1,500 premium or whatever. I get to keep that premium, and I mean, it already served its purpose, because Uncle Sam got a check. All right. So that's pretty much my plan. And I got good news for Palantir shareholders. I think Palantir is going to end the year out at 35 a share. All right, based on everything. If the earnings go well and the price targets, I mean, we might get a resurgence of analysts starting to up their price targets, and margins are expanding, free cash flows are going good, they're buying more treasuries, and revenues are growing and customers are coming in more. Stock can be $35 by the end of the year, and if we get that 25% revenue growth outlook to be the new norm on a CAGR basis for revenue growth rates, I think, dare I say, $35 could be justified, as long as margins are increasing and everything's going the right direction and the market sentiment is whole as far as AI for capital expenditures in the market and everything. So that's my take on Palantir. Comment down below. What would you do? Do you think Palantir goes over 30 after earnings? Do you think that if you're in my spot and you had covered calls running and you had that position of the 1,400 shares or so, I mean, would you feel comfortable, like getting them called away, or do you think you should close those covered calls out right away? Let me know what you think. If you're finding value, subscribe to the channel. I got more companies doing earnings, got earnings coming up, so I'll put out another video on SoFi later, because I got to keep up with these companies. With that being said, I hope you all enjoy your weekend and stay tuned for my next video.